Hey everyone, welcome back to Corporate Decoder, where we uncover the hidden stories in corporate filings. And let me tell you, this latest report from Black Titan Corporation has a few surprises lurking in the numbers. It is an annual report that tells us a lot about their journey after a big business combination. Alright, so what exactly is Black Titan Corporation doing? Well, it looks like they've been busy. They recently underwent a major business combination, essentially merging with another company called Talentech to form this new entity, Black Titan Corporation. This whole process wrapped up around October of last year. It is a big deal because it means Talentech, which is a Malaysian human capital management solutions provider, is now part of this publicly traded company. Now, to make sense of all this, they've laid out a bunch of defined terms. Think of it as their glossary for this report. We've got terms like ancillary agreements, pubco governing documents, and names of specific agreements like the merger agreement, which is basically the main deal document. It is important to understand these terms because they shape how the entire report is read. They're essentially setting the stage for all the financial and operational details that follow. Before we dive into the numbers, they want to make sure we understand that a lot of what they discuss are forward-looking statements. This means they're talking about future expectations, plans, and objectives. It is like them saying what they hope will happen, but they're also very clear that these aren't guarantees. Things like the company's ability to grow market share, its ability to execute its growth strategy, and the overall regulatory environment, all of these are mentioned as factors that could change the outcome. They're basically saying, hey, we have plans, but a lot can happen that is outside our control. Now let's talk about the really important stuff, the risks. Every company faces risks, but some of the ones Black Titan faces are pretty significant. For instance, they heavily rely on third-party software licenses for their services. This means if those vendors change their terms or end their relationship, it could seriously hurt their performance. Then there is the customer concentration risk they mention. This points to the fact that a few big customers account for a large chunk of their revenue. Lose one of those and it is a big hit. They also highlight competition from other human capital management or HCM solutions providers. If they can't keep up, their business could suffer. And as a growing company, they also face the risks of operating as a public company, including their management team having limited experience in that area. This is a common challenge for companies that go public through a merger like this. Speaking of the public company aspect, they admit that Talentech's management team has limited experience running a public company. This isn't uncommon. Suddenly you have way more reporting requirements, investor relations to manage, and all sorts of new rules to follow. They're also concerned about failing to implement and maintain effective internal controls over financial reporting. This is crucial for investor confidence. If they can't accurately report their results or prevent fraud, investors will get nervous, and that can tank the stock price. Being a foreign private issuer also means they have fewer reporting obligations than a typical US company, which can be good for them, but also means less protection in some ways for investors. So what exactly does this company do, Talentech? The main operational part of Black Titan now has been around since 1990 and became a PeopleSoft licensee way back in 1993. They're essentially resellers and service providers for HCM software from big names like Oracle, Dayforce, and a few others. They don't build the software themselves. Instead, they're the go. Toe folks for companies looking to implement, train on, and maintain these HCM systems. They operate a lot in Malaysia and Singapore, helping businesses manage their people, payroll, and HR processes more efficiently. Think of them as the experts who help other companies get the most out of their HR software. Here is a quick peek at the vendors they work with and the services they offer. You see Oracle, Dayforce, Humanica, and Microimage. For all these, Talentech provides consulting, implementation, training, and maintenance support. For some, like Oracle and Dayforce, they also offer licensing and SaaS subscriptions. This tells us they're not tied to just one software suite, which gives them flexibility. Now, let us look at a key part of their revenue breakdown. For the year ending the 31st of July 2025, a significant portion, 70.5% of their revenue came from Oracle products like PeopleSoft HCM and Financials. That is a huge chunk. In the previous year, it was even higher at 78.9%. This shows a heavy reliance on Oracle. Let's get to the top line for the year ending the 31st of July 2025. Total revenues were $2,683,126. That is an increase of 26.3% from the previous year's $2,124,96. So, business is growing, and that is always a good sign. But what about the cost of generating that revenue? Total costs of revenue went up by 25.1% to $1,798,198 in 2025, from $1,437,661 in 2024. This increase is largely due to higher third-party license costs, which makes sense given their model. On the balance sheet side, looking at Black Titan Corporation specifically, which is the newly formed parent company after the merger, their total shareholders deficit was $167,120 as of the 31st of July 2025. This means their liabilities were greater than their assets, showing they still have a ways to go to become financially robust as a standalone entity, especially considering their short operational history as Black Titan Corporation. Now let's shift focus to Talentech's operations. They're the core business here for the year ending the 31st of July 2025. Talentech reported total revenues of $2,683,126. This is a solid increase from $2,124,196 in the prior year. Maintenance services, which is a recurring revenue stream, brought in $965,437 in 2025, up from $902,821 in 2024. This 6.9% increase shows good customer retention and demand for ongoing support. Implementation services, where they help companies set up and customize software, saw a good jump of 22.9%, reaching $1,025,021 in 2025. They secured new projects, including some that carried over from the previous year, which boosted this segment. Looking at their annual recurring revenue, or AAR, it was $1,307,508 in 2025, slightly down from $1,348,331 in 2024. AR is a key metric for subscription-based businesses, representing the predictable revenue from ongoing contracts. A slight dip here might warrant a closer look, but it is important to remember this can fluctuate. Interestingly, for both years, their income tax expense was zero. This is likely due to tax losses and deductions that offset their taxable income. This can be a positive for cash flow, but it also means they are not yet generating substantial taxable profits. Let us look at the cash situation for Talentech. As of the 31st of July 2025, they had $575,111 in cash and cash equivalents, and $608,820 in restricted cash. This is a slight decrease from the previous year. While they're not exactly flush with cash, they are managing their liquidity. Talentech's net income for 2025 was $209,911, up from $153,227 in 2024. That is a healthy increase, showing improved profitability. Looking at Talentech's balance sheet as of the 31st of July 2025, they reported total shareholders' equity of $954,291. This is an improvement from the prior year, showing a strengthening of their equity position. Now, digging into the major shareholders of Black Titan Corporation after the merger, Danny Vincent Das holds a significant chunk, 30.35% of the ordinary shares. Then we have the Sire Group Limited with 13.19%, and Arc Group Limited and a couple of other shareholders all holding substantial percentages. This distribution of ownership is important to understand who has influence in the company. They also touch on cybersecurity, mentioning that their third-party HCM solutions are exposed to security breaches. This is a growing concern for all companies, especially those handling sensitive data. They acknowledge that privacy concerns and evolving regulations could impact their business. And here is a quick one for you. No unresolved staff comments from the CC. That is usually a good sign of a clean filing. They've identified Ferdor's Edmund bin Mokhtar as an audit committee financial expert. This means he has the solid financial background needed to oversee the company's financial reporting and internal controls, which is crucial for investor trust. Let's quickly look at the auditor fees. For 2025, the audit fees were $130,000, and for 2024, $110,000. These are the costs for the independent audit of their financial statements. They're not too high, which is generally a positive sign. The auditors themselves state that the financial statements present fairly the company's financial position. However, and this is a big however, they also point out that Talentech has incurred net losses and has a working capital deficit, which raises substantial doubt about its ability to continue as a going concern. This is a serious red flag that investors should pay close attention to. While management has plans, these are the auditor's official concerns. Let us look at Talentech's consolidated balance sheet as of the 31st of July 2025. Total assets stand at $2,722,502, with total liabilities at $1,768,211. Shareholders' equity is $954,291, which is a positive sign. indicating that their assets are greater than their liabilities. On the income statement, Talentech's net income for 2025 was $209,911, a nice increase from $153,227 in 2024. This shows they are heading in the right direction financially. And the cash flow statement for 2025 shows a net increase in cash and cash equivalents and restricted cash of $1,234,030. This is a significant change from the prior year, which showed a decrease. This improvement in cash flow is a direct result of some financing activities and positive operational cash generation. This line item, foreign currency translation adjustment, shows a positive $64,567 in 2025, compared to a negative $30,932 in 2024. This means currency fluctuations were more favorable in 2025, impacting their overall comprehensive income positively. On the asset side of Talentech's balance sheet, current assets are $2,462,895 as of the 31st of July, 2025. This includes cash, receivables, and deferred costs. The health of these current assets is crucial for short-term operational stability. Total liabilities for Talentech stand at $1,768,211 as of the 31st of July, 2025. This includes accounts payable, notes payable, and leases, which are all business expenses that need to be managed. They've adopted US Generally Accepted Accounting Principles, or US GAAP. This means they are following the standard accounting rules used in the United States. This is important for comparability of their financial statements with other US companies. Talentech has a mixed tax situation, operating in Malaysia and Singapore. Malaysia has a statutory tax rate of 17% for their income bracket, and Singapore also levies a 17% corporate income tax if they are profitable. Interestingly, for both 2024 and 2025, Talentech reported zero income tax expense. This happens when their tax benefits, like carrying forward losses, outweigh their tax liabilities. It is good for current cash flow, but indicates they are not yet consistently generating enough taxable profit to owe taxes. As of the 31st of July 2025, Talentech had $358,626. Due to the Sire Group Limited, this is an amount it owes to a related company. They also had significant borrowings, including term loans and overdrafts secured by guarantees from the company's shareholders. This shows a degree of reliance on external financing and personal guarantees. Their lease liability as of the 31st of July 2025 is $151,642, which represents the value of their office space lease. This is a long-term commitment that affects their financial picture. Let's talk about earnings per S-Hair for 2025. Talentech's basic and diluted earnings per S-Hair were $0.36, up from $0.31 in 2024. This is a good sign of increasing profitability on a per-share basis. They disclose a concentration of credit risk. This means a few customers account for a big chunk of their revenue and accounts receivable. For example, in 2025, customer B alone represented 13.78% of their total revenue. This highlights the risk if any of these key clients were to leave. They also have supplier concentration. For 2025, supplier A accounted for 47.40% of their purchases. Relying heavily on a single supplier can be risky if that supplier faces issues. A critical event happened after the 31st of July 2025. Black Titan successfully completed its merger with TTNP and Talentech. On the 2nd of October 2025, their ordinary shares began trading on the Nasdaq Stock Exchange under the ticker symbol BTTC. This marks the official transition to being a public company. So, what is the verdict on Black Titan Corporation? Well, the financial results for Talentech show growth and improving profits, which is positive. However, the auditor's concerns about going concern and the initial financial state of Black Titan Corporation itself, being a newly formed entity with a shareholder deficit, suggest there are still significant hurdles to overcome. Their heavy reliance on Oracle for revenue and the identified concentration risks with both customers and suppliers are notable weaknesses. On the plus side, their strategy of expanding cloud-based solutions and their long-standing customer relationships are strengths. But the overall picture is one of a company in transition, with potential for growth but also significant risks to manage. They are growing, revenues are up, and they've successfully completed this big merger. But the road ahead as a newly public company with a history of losses in its core business is definitely one to watch closely. Alright, that is our deep dive into Black Titan Corporation's latest filing. What are your thoughts on their growth strategy and the risks they face? Let me know what you think in the comments below. If you found this analysis valuable, make sure to hit that like button, subscribe for more corporate deep dives, and importantly, join our Discord community linked in the description. Thanks for watching, and we'll see you in the next one.